I'm not waiting for them to fall flat on their face, right? I'm waiting for them to readjust, come at the plan from a different approach and be successful, and then that, to me, that's a win-win all the way around. Again, obviously everybody wants their revenue stream to exceed the plan.
Welcome to the Going Long Podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And I am your host, Billy Keels, and I am super excited to share today's conversation with you because it's absolutely going to be awesome, especially if you love being a limited partner. This is going to be really awesome. And yeah, you're going to learn so much. So it's going to be amazing. So with that stated, listen, we continue to move up the charts. Really love that you continue to share the episodes, that you continue to leave your honest written reviews as well as ratings. And if you have not done that yet, if you could just take a couple seconds, we even made like a really simple video for you. Just click the link on the Apple Podcast platform. If you listen to today's conversation, then go over there and just leave an honest written review and rating. We'd really appreciate that. And we'll continue to move up the chart so we can get more amazing guests like the one today that are going to help you move forward faster. Also, for those of you who want to see the previous episodes, like way back, like 1, 3, 5, stuff like that, and you just want to binge every episode, go to billykeels.com. Once you're there, go to the podcast tab. And once you go to the podcast tab, you can find every single episode you've ever wanted to see. So billykeels.com, go to the podcast tab, and it will be amazing. You can find everything there. And then also for those of you who are accredited investors and you want to connect with other accredited investors, gain access to super deals, and just talk about accredited investor stuff, just send me an email, aiclub@billykeels.com. Once again, it's aiclub@billykeels.com. We can connect and it'll be awesome. So with that stated, we've got an amazing guest today who has really gotten this limited partnership thing down, investing through others passively. He's going to talk about what he's done to be able to do this well over 15 times. Like, there's a specific number. I won't tell you what it is, but you'll just have to listen because it's pretty amazing. He's even enjoyed it so much and it's given him so much more control over his life that he is now moving into the active space. It's a guy who has a very defined way of looking at bringing value to others. He's done it for over 47 years. Or he did it for over 47 years in the industry, and then he moved into becoming a full-time passive investor, and then he decided he wants to become an active investor because he wants to continue to bring value to others. You're really going to enjoy this conversation that I have with Mr. K. Trevor Thompson, which is going to be coming up just after this. Are you looking for a way to get to long-distance investing success, but not spending all the effort? You want to do it in a way that's much faster and it doesn't cause as much pain? Well, listen, I can save you all of that stress. Just go to billykeels.com/7 mistakes and you can pick up your free PDF to help you on your road to long distance investing success. So, you know what? If you want to know how success in the attractions and entertainment industry can lead to successful passive investing long distance and doing that with a passion, then guess what? Today's the conversation you're going to want to listen to until the very last word. You know why? Because today's conversation is going to be absolutely unbelievable because our guest today, listen to this, not only was a successful VP for, you're not even going to believe this. I'm going to tell you, you're not going to believe it, for over 47 years in the attractions development and operations space. He's going to tell us what that means. I think most of you know, but just in case, he also spent over 20 years as a designer and builder of vertical wind tunnels. Really? Honestly, sounds amazing. He's also an accredited investor who has LP'd in over 17 deals or opportunities. It may have even changed since then, so I'm sure he's going to tell us more about that. And he absolutely loves learning and sharing his knowledge. He is the founder of Niagara Investments, LLC. It gives me great pleasure to welcome to today's conversation, Mr. Trevor Thompson. Trevor, welcome to the show.
Billy, well, how you doing? I'm awesome. Great to be here. Very excited.
You are better than awesome, man. You are phenomenal. And I know that the Going Long family is going to really enjoy and learn so much from today's conversation. So I just would love for us to jump right in. And as you know, Trevor, I ask everybody 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end. You're going to get questions in the middle, but I have no idea what those questions are. So I can't even attest to what those could possibly be. So if you're ready, we're going to go ahead and jump in with question number 1.
I'm ready.
Which is, can you help us understand, where is it that you live in, I'm going to say North America. Where do you live in North America?
Yeah, so currently I'm in Austin, Texas. the growing crazy growing city. It's amazing what's happening.
Yeah, just a little bit. But so most people would hear that and they would say, well, the accent doesn't necessarily sound like you're from Texas.
No,
are you from,
that's right.
Are you from Texas?
No, sir. I'm originally from Canada. So when I say out and about, you'll know it. And I moved to the US about 25 years ago and was in Orlando for 11 years. And now I've been in Austin for 13 years.
All right, fantastic. Which is also why we adapt and ask where you live in North America. So it's always kind of a nicer thing. So with that, you're in Austin, Texas. It's a lot going on in Austin, Texas. And so help us understand, Trevor, what's the most positive thing that's happened to you in the last 24 hours?
Positive thing in the last 24 hours. Wow. So I would say opportunity to be on my first deal. And we had some really good meetings yesterday and we're getting closer to close. I've been trying to get on the active side for a very long time. And I feel like we're finally getting close to getting there. So I'm very excited.
Fantastic. So you made progress. And then I'm sure people were like, what do you mean you wanted to get on the active side? And that's going to come out. Don't worry, everybody. Just relax. Trevor's going to tell us all about that. So congratulations. That's great. I appreciate you sharing that moving the momentum forward. It's always something that is positive and helps us to continue to move forward. So, listen, Trevor, and you've probably heard me try to do this once or twice in the past, and the entire Going Long family, like, they usually forgive me because I try to tell your awesome story. I mean, I was talking about wind tunnels, 47 years, which most people will be like, that's not even possible, Billy. And I tried to do that. I think it was like 3.5 seconds. Yeah. Never, ever going to happen. The Going Long family, they forgive me. Hopefully you will forgive me as well, but most importantly, you'll also help me. And could you do us a favor and share your backstory in your own words, Trevor? And one of the things I'd also like to ask you is if you could talk about some of the major decision points that you've made to get to this point in your journey, and then we'll see where the conversation goes from there.
Yeah, so I started in the attractions industry very early, age 13, and I worked for a company called Ripley's Believe It or Not in Niagara Falls, Canada, all through high school. And then I left Ripley's Believe It or Not, and I went to Guinness World of Records. They opened up a new attraction also in Niagara Falls, and my career with them grew to where I actually managed a location for them in the Empire State Building in New York City, opened up a franchise location in Los Angeles on Hollywood Boulevard. It was an amazing, very interesting journey. And in fact, I was going to open my own Guinness, and originally started in Branson, Missouri, where I was actually helping a friend that owned the Guinness in Los Angeles open up a Hollywood Wax Museum in Branson, Missouri. And it was going to happen in Orlando, Florida. And then just as we were ready to make the deal happen, Ripley's actually bought the rights to Guinness and wouldn't grant me the franchise rights. So strangely enough, I'd already made some plans. And I ended up opening, of all things, a year-round haunted house. Never really been into the horror business or anything. I was a little bit gothic as a younger guy, but, and then so I'd agreed to do that. And for 3 years. And unfortunately, it wasn't that successful. But again, it was very, very interesting, learned a lot. And across the street, they opened this strange thing called indoor skydiving. And really didn't pay much attention to it. To be honest, it looked like a big air conditioner for Universal Studios. It was this big, strange building. Well, long story short, I got recruited by a headhunter who brought me into the business. And at the current time, the owner had invented this new concept, started the business, and it was not that successful. And he was looking for somebody that really understood the attractions business to make it successful. And long story short, we tripled the business in 3 years. We started growing. He took on a new partner, and we ended up developing 80 locations worldwide in the next 20 years, of which I personally opened 46 of them. So some very exotic locations, Brisbane, Australia, Queenstown, New Zealand, Sao Paulo, Brazil, Brasilia, Brazil, Calgary, Canada. So a lot of very exotic things, including on cruise lines. So we put it on the first cruise ship, and actually went on the inaugural cruise where we were flying the media. It was a very, very exciting career. And I just loved it. And interestingly enough, at the very first team meeting, some 20 something years ago, the owner gave us all a copy of Rich Dad, Poor Dad. And it touched me. But I did what unfortunately so many people did, put it back on the shelf and continued doing my life. working and kind of not making any investments. And it became clear to me that became as I got older and older, my delays were really affecting me. I wasn't able to grow any passive income, do anything. And so then I decided, okay, that's it. I'm going to get serious. We got bought out by a private equity company. I managed to get some personal income and wealth from that. So I decided, okay, this is the trigger now that can change my trajectory. So I started understanding real estate. I joined the local mentor program and made my first few investments. And then obviously in the last 4.5 years, I am at 17 right now, and 2 have gone full cycle, which were my first 2 investments. And sadly, I made nothing. I only got my money back, but I got the lessons of a lifetime out of it. And so it was good. And then, as you mentioned before, now I'm switching to active because unfortunately I did get let go from iFly during COVID. And I decided that I really miss running businesses and that there's a good fit for my skill set in the asset management portion of a team that takes over projects, because I love opening and running businesses. And so very excited to say I'm on my first deal now, and we're hoping to close in about 30 days on a property in San Antonio. And I just can't wait to get in there and be able to affect the day-to-day operations of that apartment complex.
Wow. So we start as a 13-year-old who is hanging out at Ripley's, believe it or not. I started working at 14. So that was actually really cool. And then we take the trajectory. That thing with Rich Dad, Poor Dad definitely happened to me. I started reading it, seemed like amazing. And then it sat on the bookshelf for like 3 or 4 years. And then I picked it up again. And I was like, oh my gosh, what have I been doing the last 3 or 4 years? And then all the way through passive investing, you talked about the 2 deals or the 2 opportunities where you actually went full cycle, but you didn't earn anything except you got your money back.
Yeah.
which I think is probably not bad. And don't worry, we're going to dive into that more as well a little bit later. And then into the active part where you really are. And I saw a smile. So if you weren't watching the video, if you're not watching the video version, if you want to see Trevor like smile ear to ear, check out the video version when he starts talking about asset management and being able to affect change that is happening. But the one thing that I actually want to kind of pick up on, you did mention that you helped a business, I think you said was it 3 years to 3X and go 80 locations?
Yeah, so we didn't do the 80 in 3 years. We did the 80 over 20. But yes, okay. So when I originally started at the first iFly, it was actually losing $50,000 a month.
Gotcha.
And, basically I was his last ditch. If you can't get this thing to work, and then we figured it out. It became very popular with the skydiving community. So they started training, and the thing just exploded and got very, very busy. Like exceptionally busy. Like our record was 172 hours nonstop operating. So if you figure that's almost a week where we ran 24/7. So if you can imagine people at 4 o'clock in the morning training in a wind tunnel, it's pretty crazy.
Yeah, I can only imagine. But so I got the time frame wrong. So it was 20 years, but you said out of the 80, you were personally there for the opening of over half of them, 46.
Yeah, 46.
And it took you around the world, which I love. We're definitely, because like the whole long distance thing, I've worked and traveled throughout 86 countries, and it's like, you mentioned New Zealand. I was thinking Queenstown. I did a bungee jump there a long time ago, and that was amazing, and all that kind of stuff. I still haven't been to Brisbane yet, but I've been to Queenstown and Sydney. But anyway, not gonna divert there. But one of the things that I do want to kind of come back to is, like, you're in these very highly visible type of roles in industries where people are feeling good about themselves, right? People typically go because they want to have a great feeling and get an adrenaline rush. And then you went from that to this space, which is real estate, which sometimes people would say it's not necessarily like the most like coolest adrenaline rushing kind of industry. But what was it that was not happening in the entertainment / attraction industry that made you start looking outside for something else?
Well, basically, I was making other people wealthy. So all of my work, our company was making piles and piles of money. And they, kept controlling what you're going to do and do the different things. And, it was like, oh man, I'm like, all of my energies, the benefit of them are going to someone other than me. It's not producing anything other than a paycheck, a bonus maybe once in a while, some sort of incentive. But, where when you start to get into real estate, you build your personal net worth up. And you start to look at the world differently, look at what you're going to do differently. And it causes a shift in your thinking of, you're sort of thinking about, I want to say just yourself. You're thinking about how can I take care of myself so I can do what I want to do later on.
Yeah. So, so it's basically the mind shift, recognizing where you are, that you are at this point for you was, hey, listen, I'm doing all this work and I'm helping it to benefit someone else. I'd like to actually start to be able to do some of the things that could help to benefit me in the life goals that I have. So that makes a lot of sense. But then you had the Rich Dad Poor Dad experience, Trevor, and you decided real estate was something that you wanted to get into. You've invested in 17 different opportunities as a limited partner, right? Are all 17 of those opportunities in Austin, Texas?
No, sir. Most of them are in Texas, one in Tucson, Arizona, and another one just outside of Charlotte, North Carolina. Okay. And they're not all in multifamily. Multifamily is where I focused my education, but I have 2 land deals, a retail strip center, a medical center, a single family home fund, and an apartment to condo conversion. So I'm quite diverse in my investments. Awesome. I have this sort of theory of why I'm doing it. I call it earn and learn. So I want to be able to earn some money, but I want to learn about a different asset class. To be honest, when I originally started, I was mostly interested in retail. I had some partner in the haunted house business, and he ran a bunch of retail locations, and it's quite interesting learning about his buying and selling and land deals. But then I realized the power of multifamily. And I decided, okay, that's where I'm going to focus, because you can do so many more things within that space. You can create a better place for people to live. You can create a better place for people to work. And then you can take all of your limited partners along for the ride, let them achieve financial independence, and then they can use their money for their why. It may be to continue to invest in real estate. It may be, all kinds of things. And I like that. I'm going to call it the circle of wealth or whatever. And it's very unusual that I never anticipated I would feel this passionate about real estate. I had no idea that I would meet so many amazing people. I would be involved in so many amazing products and businesses and things that happen, and that I would actually be changing people's lives. I had no idea. iFly, it was a great experience. And I want to say it's life-changing, but it's like a dream, right? We can fly. And, so realization of people's dreams. And, we had these all ability nights, my favorite night, where people with severe handicaps would come and we would get them to fly. And, just to see this autistic child who'd been switched off the whole time in flight and have his eyes open up and he could realize that he was flying. I mean, nothing. I mean, you would bring tears to your eyes every time you saw it. I don't quite get tears to my eyes in multifamily yet, but we're still influencing people's lives. It's amazing.
Yeah. And so, so it's interesting you say that, because it is a matter of, it seems like you have this pattern, right? One of my mentors will say, look for patterns and principles, right? And so it's a pattern that you've had in terms of helping others, whether that's doing that through entertainment, whether that's doing that through, being able to attractions and doing things that are different, or now even helping people from a life and a lifestyle perspective through the different assets that you are investing in. But I guess the one thing, knowing that they're not in Austin, Texas, the majority of them, right? It comes back to the principle and the premise of this show, which is really helping people to understand that, I want people to feel comfortable and confident investing beyond their backyard. You've talked about doing this 17 times, not once, 17 times. And sometimes people are like, oh my gosh, if the house isn't just down the street and I can't go see it every day, I'm never going to invest. Everyone, listen, we have someone who's done this 17 times passively and is now making the transition actively. This goes against everything that most of the books say to do, Trevor. You do realize that, right?
It do. I do.
Okay. So you're in the perfect place. You're amongst friends. You're here with family here, the Going Long family. But I also would love for you to share from us, because it goes like it's contrarian in its way that you're investing beyond your backyard. So help us understand, why is it that you, or what, I guess, was it that you found like, okay, this is okay to invest in a place that I don't actually live? Because it goes against everything that the real estate books say.
Yeah. So passively, it's much easier because I look for investments with people that have what I'm going to refer to as local knowledge. I don't have local knowledge in Tucson, Arizona. I don't have local knowledge in Charlotte, North Carolina. So for my first few active investments, I do plan to do them in Texas, where my local knowledge will really help. But as I develop and feel more comfortable with getting a process understanding, then I'll feel more comfortable having a partner who is in the other location, because I'll feel more comfortable that, okay, I can, with that partner, the boots on the ground, because boots on the ground are still a very important part of this, that you need to have, but it don't always have to be your boots. And that does take a lot of trust to give your money to somebody else.
Can you please say that again? Whose boots? They don't have to be what? Your
boots. They can be somebody else's boots. Now you need to know, like, and trust. We all talk about that with that person, and they should have a track record, and you should feel comfortable. It's you're giving them, in theory, your hardworking life savings, and you want to make sure that they're treating your money the same way they would treat their money.
Well, they better be treating it better than they would treat their own money. In my very humble opinion, first and foremost, they better be treating it better than their own money, because it's your money. You've worked for it. The first thing. The other thing is, I just, it's a breath of fresh air, Trevor, when you're sharing your story, because sometimes people think there's only one way to do something. And what I love about what you've just shared with us, and each one of the Going Long family that is listening or running or cooking dinner or getting on a plane or whatever, is that you mentioned that this is the passive way. There is actively ways to do it. And then there is a process, as you say, I love that process, to everything that can be done, which is you have to know, like, and trust the person. Know, like, and trust the team. That's not something that happens overnight. This is something that is going to take you time, and you should have a process to that to be able to begin to not just know someone, because that happened, that's on them, but then to begin to like and trust the person. So, you have a lot of experience in this area, Trevor. And so I know that there are a lot of very high paid professionals that are listening today, and they're like, man, you know what? I do want to do something else, but I just don't know how to actually, what should I be doing? How do I know if I'm going to like someone and trust them and da-da-da? You've got a lot of experience. Can you share just a couple of the gems with us? Once you know about someone who's, like I said, is on them, how do you begin to like and more importantly, trust them?
Yeah. So my first out-of-state investment was with a group that did a lot of asset management training. They wrote a book, Best in Class. And I spent a lot of time and energy in their training thing. I took their paid courses. I took their free courses. I followed them around when they were on webinars or when they did different people's podcasts. I listened to it. And I'll be honest, the most impressive thing to me was when they admitted when they made a mistake and how they got out of it and planned, right? I am so tired of the perfect people. There are no perfect people. There are no perfect operators that just tell you the glorious stories of the great returns. I want to know that you went into a project. I want you to be honest that you had a few struggles and then how you overcame that. That to me gets the know, like, and trust. When I get to the trust, right? When I understand that you're going to tell me what's really happening with my investment, not what you think I want to hear. And because, again, I talked about it earlier, my mission has always been to earn and learn, right? So I want to earn some money. I want to give you my money and have that investment pay off. But I want to understand where are we in the project? What have been our obstacles? Why has it taken so long to get to this level? And to be honest, I'm okay when it takes a little bit longer if I can learn everything about it, because I'm there not only to make profit, but to get educated so that I can do a better job when I start asking other people to give me their money. I can be that kind of person that is open, honest, and forthright with what am I doing and where are we in this investment cycle.
So recognizing that there is no perfect people, the people that pretend to be perfect are probably the ones you want to run from. I love that. And hearing about, what were the obstacles that they faced, how did they overcome them, and what were the results. You've done this 17 times. So once again, you probably have a little bit of experience in this area. So be prepared for the question here. No. Wow, don't you just love this conversation? This is amazing. This is fantastic. And so just really quickly, I just wanted to remind you, for those of you that are looking to create more options for yourself, get there faster, and do that with long distance investing, make sure that you go to billykeels.com/7 mistakes to avoid so that you can avoid all those mistakes, get to your goals faster and sooner. Once again, that's billykeels.com/7 mistakes to avoid. Now back to the conversation. One of the things that people talk about a lot is this aspect of reporting, right? And so in your estimation, what is the frequency, number one, of reporting, and what is the content of reporting that helps you as a passive investor feel comfortable, informed, and confident that things are being transparent or helping you to understand the current state of the opportunity? Frequency and content.
Yeah, so obviously monthly reporting is great. Few of my first investments only did quarterly reporting, and not enough. I had one investment that at the beginning actually did weekly reporting. It was
Did you say weekly?
Weekly reporting, where they said, okay, this week this is what's happened in this week, and then they went to bi-weekly, and then they went to monthly, which was a little, and it wasn't huge. It was just basic reports. This is where we are, what we're doing, and I was quite interested in it. I know other people that may be too much of the reporting, but what I really want to know on a report is, we were here, now we're here. This is how we got there. Here's the plan to get to where we're going. And hear how all that relates to what we told you we were going to do. Okay, so we can be ahead of, behind on. It's okay as long as we're ahead of. Hey, we think we're actually going to stay ahead of because we're getting to ride this great inflation with higher rents or whatever. Or we're behind, but we feel comfortable that now we've got a better system of removing some of the poorer tenants and putting in, one of them was turning a lot of Section 8 housing to regular housing, and that takes time. To be able to do it properly. Sometimes, a little bit longer to get a CapEx project finished than they thought. And then obviously the numbers are very important, right? Again, here's where we are financially, here's where we are on expenses, and here's how we are compared to where we were. I couldn't believe it. I had a year-end report from a guy, and I sent an email back saying, could you tell me how that is compared to plan? And his response was, look at the PPM. We haven't varied that plan. And I thought, what a terrible answer for the know, like, and trust. Like, go look it up yourself, right?
So is this someone that you would invest with again in the future?
No, it's not.
Okay.
No. I want somebody to say, okay, and I want that to come out as normal part of the planning, right? Here was the plan that we promised you we would take. And here's where we are relative to the agreed upon plan. And I understand sometimes you're exceeding it and sometimes you're not exceeding it, and everybody always hopes to exceed it, of course, right? We did conservative underwriting, everyone says. And what does that really mean? But how do we get to that plan? If everybody does conservative underwriting, then in theory, all my investments should be above the plan. And they're not, I'm going to be honest. But some are doing better because we're in this strange phenomenon right now.
Yeah. So, it's really interesting that you mention that because sometimes so there's the content of the actual reporting. So, like you said, it helps you to understand, are you ahead of plan? Are you behind plan? Are you on plan? And why are those things happening? As a passive investor, do you care more about the explanation of where you are, or as you mentioned before, that the funds reach your account on the days that they reach your account? Or maybe said a different way, are you more willing to be understanding if you get exactly what you were supposed to get financially on the day that you were supposed to get it and the reporting is versus the reporting, which is absolutely phenomenal, tells you where you are, why you are, you're way behind plan, and your payment comes 50%, 60% below plan and late?
Well, obviously the best is a good report with a meeting plan, but that doesn't always happen.
that wasn't one of that wasn't one of the options.
Happened, but
you've done this 17 times. That's why you get the hard questions.
Yeah. At the end of the day, I want to know where we are. And I want to know honestly where we are and why we're not there. I'm a big boy, and I understand that real estate investing, while it should be safe and secure, still is. There's 180 something pages in a PPM that tells you why you're an idiot to give me your money, right? There is a reason for that. This is an investment. It is a risky business, but I want to at least get the honest truth of where we are. Again, because it goes back to this earn and learn. How did we get here? Why are we struggling? And what is the plan to get there? And nothing makes me happier when they overcome and get there, right? I'm not waiting for them to fall flat on their face, right? I'm waiting for them to readjust, come at the plan from a different approach and be successful. And then that, to me, that's a win-win all the way around, right? It's a win for the residents, it's a win for the property management companies, it's a win for the syndicators, it's a win for the investors. So again, obviously everybody wants their revenue stream to exceed the plan. Everybody dreams of that, right? The big, double multiple of my money in 3 years, who doesn't go to bed and dream about that, right?
Yeah. And it's, once again, it's from a going long family. What are some of the points that Trevor's talking about that are really important that I want you to think about, because he's really leaving you lots of golden nuggets. I would even say some of them are platinum. Number one is every investment, real estate included, has its inherent risks. It is about understanding what are those risks up front. And you just said it, you're a big boy. And so it's about being able to stay informed about what is happening. And that can take on a number of different ways, right? Depending on how many investors you have. Maybe it's a phone call, but it's talking about where we are compared to plan. And whether it's phone call, it's emails, it's quarterly, it's weekly, it's daily, it's monthly, whatever it is, that it's a way that's being able to be done in a consistent manner to keep your investors informed. Because typically when the payments are made on time, every time, there's less of a challenge. But when they're not, and there's not been any information, that's usually when the bad things start to happen. So, Trevor, was there anything you wanted to add on that?
No, I just think that for every syndicator out there, share more than less, and let the reader skim through it or dig deep into it and ask some questions. Some people are quite happy with a high level report. They'll read through it quickly. And other people like me are obsessive learners and want to understand, every single thing, and I'll absorb all of the bits of information.
Yeah. Well, you've got a learn and earn strategy, and that's it. One of the things I would recommend, and I don't do very many recommendations to anyone who is considering getting into syndication, when you're the investor who has entrusted you with their hard-earned money, when they ask a question, I wouldn't recommend that you say, go read the PPM. Not something that I would highly recommend.
I agree.
Trevor, would you agree with that?
I couldn't believe it, and I just said, I just want to get an idea how we're doing compared to. And you would think he would already know, and he would have some sort of document that would say, here's how I'm performing to plan. So, And to be honest, I haven't had the time to go back and do it. I'm assuming it's not good news since he didn't do it. But I actually, that reminds me, I need to go do it today, just because I really want to know.
Yeah. All right. Well, I'll let you do that. Speaking of which, one of the things that is important, and I do want the kind of wrap things up before we get into the going along final three. I do want to talk about your movement from passive to active, but there's so much that we can also learn from you, Trevor, in terms of from a passive investing perspective. When you're a passive investor and you understand the syndicator and kind of who they are, and sometimes there's a syndicator and then there's an operator, right? Sometimes it's the same person or the same entity, if you will. But help us understand, what are some of the things that you have found to be the most effective, or what I would call from my old corporate speak, what is best practice from having a robust due diligence process as you look to invest your hard-earned capital?
Yeah, I mean, you definitely want to make sure that they've really done their due diligence. It's amazing. Like, I've been on several due diligence, part of what I was doing. There was a couple of deals I was on, and I got a copy of the due diligence report, and this deal ended up falling through. But I'm like, hold on a minute. They missed all of these things, and all of these things have some substantial cost to them. Like, I counted 15 broken windows. Where's new windows in the plan, right? There was nothing, not even just a line item saying, there was sidewalk upheaval. That was a safety factor. And so I went back to the main sponsor and said, where are all these things in this due diligence report? Like, it was significant.
So Trevor, and I'm putting myself in the extreme location, right? Because I'm someone who lives in Barcelona, Spain, and I'm looking at it and I have a sponsor, and the deal is in, name your city, in the Midwest, right?
Yeah.
And you're talking about something that's very micro. So what are some of the things that I could do as a passive investor? I've got $500,000 I want to put into deals or a deal. And you're talking about something that's windows. Like, how can what are some of the things that you mentioned you're invested in?
It's hard to do. You've just got to trust that you've been giving your money to a quality operator. You just really have to do that, right? And that they've got really strong person there that sees and knows what's going on. And it is the big hard thing, because it's a big trust that they're giving you all the information.
Yeah. And so, and that's definitely one of the things. Like, would you say that it's unreasonable for someone who's going to, put $300,000-$400,000 in or even 50 grand, right? And they're saying, hey, listen, I'd love to get pictures of what the property looks like, or do you have any drone footage or things like, because I love what you're talking about. Like, if you just see the property, sometimes it just helps you say, hey, listen, I've seen this property, give me a property with a date stamp, and I'd love to be able to see what it looks like now. And, from there, what's the plan? Because sometimes you can actually see that there are broken windows, or that the parking lot looks like it needs to be completely repaved. And then as you're looking at that, then you can see, and as part of their plan, if that is actually contemplated as part of the refurbishments. Would it seem unreasonable to ask for that kind of stuff from a syndicator? Or
it is for them to maybe send it to you they might not want to do that. But I had someone who asked about that, so I actually did a Zoom call with them and a screen share, and showed them the 380-page due diligence report to the point where they were so bored.
But it goes,
it's not exciting.
No, Trevor, but I love, so this is a perfect example, right? You just said you'd rather give more information than not enough. And so, hey, listen, I've got this 380-page document that I'm really willing to take you through. Somebody is there and they did a video walking through the property. We could send that to you. Do you want to spend the next 18 hours going through this 380-page report? Perfect. Let's go. Let's jump on the Zoom.
Yeah.
I mean, it's just, it is one of those things, but I guess also the reason for the question is you can at least ask whether or not the syndicator is going to be willing to do that or able to do that. Then it also goes back to, well, the person, you're starting to like the person, but does that response provoke trust? Yes or no? And, there are a number of different ways that you could, that you could take that. But I appreciate you sharing that with us. So, but I kind of want to, there's this one thing that is really, really cool that I want to talk to you about, because after you've done the limited partnership 17 times, I know I keep going back to that number, you really are moving towards a more active role.
Yes.
You talked to us a little bit about the fact that you like to be able to make impact. You're really looking forward to this that's coming up. But what's been some of the driver for you to want to move from the very, I would say fruitful learning and earning a lot in 17 different opportunities? And I know 2 of them have gone full cycle and maybe wasn't exactly what you planned or whatever. But why move from that to the active role?
Because it excites me. The whole thing excites me. And I'm not ready just to sit back and collect passive income. I always say in theory, I have no life but doing this. And so I see myself as being able to do this, and being able to be someone that someone could give their money to. I could give them a good return. I just love managing businesses. I love operating things. I love incremental improvement. And I'm not going to get that on the passive side. I'm not going to feel that, I'm not old enough to completely just say, okay, I'm going to go sit on a beach. I would go crazy. I would be unhappy. And so even though it's hard work, getting deals, running deals, managing deals, don't get anybody wrong. Being an active syndicator is hard, real work. I'm ready for that because I get a good portion of my reward out of that. The kind of who I am and who I am, that I was able to make it a better place to live, make it a better place to work, make it a good investment. And then, everybody gets to go do their why after those things have happened. And their why can be whatever it is. I know some people that just, want to do completely different things with it. They're not doing it for any other purpose than to fulfill their why. They've got a mission or a charity or a cause. And then some are just so that they can stop their 9 to 5. And, they want to do that and, go to live in Europe like you did and just, say, I'm going to have a whole new lifestyle change. And for me to be able to, through my activities, give people that, I find that very rewarding.
And so being able to have this personal reward also has a lot to do with having clarity in terms of what it is that you want to be able to achieve in life, right? I mean, and it goes back to the same things we were talking about just a second ago, the principles that you had. You recognized that at a certain point you were working for someone else and although that was treating you well and you'd had a lot of success, you were looking to do something where you had more control. And so then this passive investing thing came along and you were doing that and it was passive and it was more control than what you were doing before and you would see the direct benefits. But then even at that point, you recognize, hey, listen, this is kind of cool. I've done it. I've gained experience. I've earned, I've learned. And now, you know what? I want to now take it to something else. And so there's this constant reevaluation of where you are in your life and being able to create opportunities that allow you to be fulfilled.
Yes.
Would that seem reasonable?
Exactly it. Yeah, it's exactly it. Yeah.
And being able to create those opportunities, which I think is great. And you're seeing that the people that you're surrounding yourself with and the networking opportunities and also most importantly, Trevor, is really continuing to take action, which I think is absolutely awesome. So listen, man, I want to keep talking, but we kind of have to get to the going long final 3. And the thing is, I never ask anybody the going long final 3. And because today you are our super special guest, Trevor, I'll never ask the question unless you tell me that you're ready for me to ask you. So are you ready?
I'm ready.
Why did I know you were going to say that? I knew you were going to say that. So here we go. So from our friend from Canada, who's now calling the Lone Star State home, over on that side of the pond, I'd like to ask, this guy from Ohio who's now living over here in Europe, to ask you on this side, bring everybody back this way, and have you tell us, what is your favorite European city that you've either visited, Trevor, or is still on your bucket list to visit?
Yeah, my bucket list is Barcelona.
Yes.
It is. It just, everything I hear about it, see about it, it looks amazing. It really does. And everything. Yeah, it's been on my bucket list. I've not been there. But definitely there.
So you haven't been here yet, and now you have a friend that's here. So definitely make sure that we're talking about what the plan is going to be when you get here, and it'll be all that kind of cool stuff. So I'm ready for that conversation. So let me know when you're ready. Perfect. So appreciate that. And then question number 2, and this is really one of the things that I have learned from, being very fortunate, to be honest, and having met a lot of very successful people, and I consider you to be someone who's very successful as well. And one of the things that happens when I recognize with successful people is that successful people, unlike most people, Like one of the main reasons that they're successful, Trevor, is because, well, they typically, on the very first time they do something, they typically get it right and they continue to accept. I get super nervous every time I ask this question. So it's, it's just kind of, it's kind of an inside joke. Don't worry. It's an inside joke with me and the Going Long family. I didn't really mean what I said, sort of. It has to do with successful people. It has to do a lot with the things that I've learned from successful people. And hopefully you'll agree, and this is no joke. People that are successful tend to do and make a lot of mistakes, a lot more mistakes than most people, like literally like 20, 30 times more mistakes than most people, but they do one thing very, very differently. And every single time that successful people make relevant mistakes, without a doubt, every single time they stop, they learn from the mistake, and then they put different strategies, tactics, or actions in place that minimize the probability of that exact same thing happening again. Yeah. So you as someone who is a very successful person, and I'm sure you've had learning opportunities or mistakes or however you want to call them. Don't think about those specifically, but think about what is the learning opportunity that you had from that, or what is the one thing that you would pay forward to the Going Long family to help us minimize the probability of that exact same thing happening moving forward?
Yeah, the most important thing is to realize when you've done it, right? To just say, listen, wow, man, did I miss that? And then make a plan that is now, it's not a failure, it's a learning opportunity. And to completely switch your mind shift around, and instead of getting defeated by it, to use it to get motivated, to get to the next level, to figure out how I could not do this again. Like you said, all successful people fail all the time. I always used to say that if you don't make any mistakes, you're really not doing anything.
Right.
You're just living so close to the sheltered side. You're not even doing anything. Go out there and make some mistakes, and you're going to learn. Now, part of the reason why I wanted to be a passive investor first and learn a lot, I did not want to learn my mistakes with somebody else's money. And so I did not start switching to active till I felt more comfortable that my mistakes weren't going to cost other people money. Doesn't mean I'm going to be perfect. Doesn't mean I'm going to be fantastic and always deliver everything. It just, hopefully I'll make less of them, and I'll have that awareness to recover quickly.
Yeah. Awesome. Absolutely love it. So realize when you've done it. And so I think it makes absolute sense. Absolute sense. So here's we go to the third of the Going Long final three, Trevor. And this is really about feeding our brains with knowledge. So what's the one book you would recommend to the Going Long family today?
Yeah, so you got to read Grant Cardone's 10X, do the Audible. It's incredible. And then you have to follow it up with Be Obsessed or Be Average. So I'm taking 2 books by Grant Cardone, but I listen to him at least 2 to 3 times a year. Okay. And it is shocking. There's tons of other good books out there, but those ones I'm going to refer to them as changed my life, my thought process.
Awesome. So 10X, which means then you had to over deliver, which makes sense. And then you have the second book, which is Be Obsessed.
Be Obsessed or Be Average.
Or Be Average. There you go.
And do the Audible. He does a great job narrating.
Do the Audible. I got the 10X Audible. So I also have the book. I have this weird thing where I buy the book and the Audible, but it's a whole different thing. We'll talk about that later. So listen, Trevor, so I honestly, like these conversations, like they fly by, like they just go by super fast. And they bring me all the way back to today's conversation at 13, getting started, Ripley's Believe It or Not, going from there into Guinness. And then from there, you're going on and you're deciding, well, hang on a second. You even talked about Branson, Missouri. And I used to live in the state of Missouri, which was absolutely unbelievable. Continuing to help people through entertaining and helping them feel sensations that they'd never done. And you talked about wind tunnels and being able to open 46 different locations around the globe, which is amazing. Lots of different experiences. And all the while, you really wanted more control. Yeah. And so then you found this thing called real estate and this ability to invest passively. And that started to give you more control. And you not only did it once or twice or 10 times or 15 times, well, you're an overachiever, kind of 10X as you talked about already, right? So 17 times the experience, being able to taste it, being able to get the experience, being able to also recognize as you begin to also now transition even to more of the active role, what are the different lessons that you learned as you earned before? And so I know that there are so many people that are like, 17 times, oh my gosh, he's doing this. You're moving from this place to that place. You had 47 years of experience in this industry, and now you continue to keep moving forward. Like, I know that there are a lot of people at the Going Long family, Trevor, that want to contact you, reach out to you, find out more about what you have going on also too at the Niagara Investments LLC. So help us understand, what's the best way for the Going Long family to reach out and contact you and find out more about you and what you've got going on at Niagara Investments LLC?
Yeah, so I'm very active on LinkedIn. So Trevor Thompson, or on Facebook. Also, you can email me at KTT, which is my initials, at Niagara-investments.com. And by the way, the Niagara is because I'm from Niagara Falls. And then my website is Niagara-investments.com. But reach out to me. I love meeting new people and sharing my passion with them.
All right, fantastic. So email is KTT at Niagara-investments.com. It's investments, right?
Yes.
Investments.com. We're also going to make it really easy for everybody. You all know that. We're going to put it in the show notes. All you have to do is click and you can go write them an email right away. Facebook, we can't do much about. LinkedIn, everybody, you always know this. This is part of the Going Long family thing. When you reach out to Trevor, make sure that you send him something that is personalized so that he knows that you have already invested some time to listen to the two of us or watch the two of us here on the Going Long podcast with Billy Keels, so that it will help the two of you continue the conversation in a much easier fashion. It gives you some context. So make sure that you link with him and do it in a personalized way. So with that, listen, Trevor, been an amazing conversation. Really, 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 from the bottom of my heart, I want to thank you for investing your time with me and the entire Going Long family, man. Thank you so much.
That's absolutely my pleasure.
All right. Fantastic. If you give me like 15 seconds, I just want to say the last words to the Going Long family. Didn't you love today's conversation? Trevor was awesome. Gave you really actionable insight and ability to go out and take this conversation, start putting things into place, into your actions, start taking action today. Share today's conversation with someone else, because you know other friends of yours really needed to hear this story today to help them start to take action to move forward. And you know what? As you're doing that, I'm really, really looking forward to welcoming you back on the very next conversation. So until then, go out and make it a great day. And thank you very much. Wow. Don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode. So go out and make it a great day.